Hey, welcome back to Global Perspectives. Today, we're digging into the latest twist in the US-China trade showdown. President Trump just dropped a bombshell. Huge new tariffs are coming on Chinese imports, sending shockwaves through the financial world. What's driving this move? How are businesses and markets reacting? And what does it mean for everyday Americans and people worldwide? Stick around for a clear breakdown of one of today's biggest global flashpoints. Picture this. It's Friday afternoon, and everyone on Wall Street is on edge. Over in Asia, the mood is just as tense. President Trump just announced on Truth Social that the US will slap a massive 100% tariff on all Chinese goods starting November 1st, maybe even sooner. Right now, Americans pay about 30% more for Chinese products because of existing tariffs. If these new tariffs launch, prices on electronics, clothes, furniture, and pretty much everything could double overnight. Why now? This comes right after China tightened controls on rare earth exports. These rare minerals are vital for making cars, phones, and more. These aren't just numbers there. Big power plays in the ongoing battle over global trade, technology, and supply chains. Trump's news is more than just tariffs. He's threatening broad export controls on key American software and technology, hoping to block China's access to cutting-edge tech. This is a major escalation after a stretch of calm. The tipping point, according to the White House, China's decision to restrict rare earth exports for tech and auto industries pushed the US to respond. Rare earths keep our phones, cars, and gadgets running, so these export curbs hit hard. In response, Trump may even revisit earlier trade embargo strategies, where some electronics temporarily got lower tariffs to protect consumers. But this time, global financial markets didn't take it well. Stocks tanked and uncertainty spiked. Wall Street's reaction was fast and brutal. The Dow dropped almost 900 points. The S&P lost 2.7%, and the Nasdaq plunged 3.5%. Investors made their feelings clear. Nobody likes surprises. On the other side of the world in China, manufacturers and exporters are rushing like crazy to ship products out before the deadline. In industrial cities like Guangzhou, factories are running non-stop. Many companies have no backup plan if tariffs land November 1st. Most businesses hope for a last-minute deal. But folks remember the pain of previous tariff hikes. Adapt or get hit. Both US and Chinese companies have learned to hustle and rework supply chains at a moment's notice. This isn't just a fight between two big countries. The US and China power the world economy and are deeply connected despite the politics. Americans depend on China for billions in goods. Meanwhile, China is a key market for US exports. The top imports: electronics, clothes, furniture. Trump keeps pushing corporate America to bring jobs home and praises companies investing in US factories. But overseas production is still favored for lower costs and established supply routes. Earlier this year, both sides eased up. China lowered its tariffs from 125% to 10%. The US from 145% to 30%. Markets calmed, optimism returned for a while. Now, new threats mean both sides are gearing up for another round. The tech sector is ground zero for this conflict. Both countries are locked in a fight over semiconductors, AI chips, and next-gen electronics. Earlier, US restrictions on Nvidia chip sales made global headlines. Some got lifted, but tensions remain. The US is clamping down on China's access to important software and AI. China, for its part, is flexing its muscles in rare earth metals needed for tech production. These minerals are tough to process, and China dominates the global supply. Trump's team has also hit global shipping, adding new fees on goods moved by Chinese-owned ships. China quickly countered with fees targeting American shipping firms. It's not just about big business, and markets regular people feel the squeeze. Tariffs mean higher prices for shoppers. From laptops to furniture, companies, now hit with new costs, often pass them straight along to consumers. Some CEOs have gotten creative, shifting where products are made or how parts are imported. But for most, there's no easy way out. Bringing jobs back home takes time, training, and rebuilding entire supply chains no quick fix. Meanwhile, in China, factory workers face their own tough questions. Will shipping deadlines be met? Will US companies cancel orders? The old promises of globalization now look more uncertain and risky than ever. So, can Trump just keep raising tariffs forever? Soon the Supreme Court will decide how much power presidents have to set tariffs without Congress, especially when national security is cited. The ruling could reshape trade policy for years. President Xi Jinping faces no such legal hurdles in China, where the government can retaliate and adapt with lightning speed. For now, the world watches closely. Markets are watching the Supreme Court. Companies are rethinking strategies, and everyday people everywhere are wondering what higher prices and a fractured global economy mean for their futures. So, what's really at stake? The US-China trade war is about way more than import. Taxes, it's a struggle over power, innovation, jobs, and the direction of globalization itself. Every new rule sends ripple effects, from Chinese factories to Silicon Valley boardrooms, right to American homes. With November 1st approaching, everyone's watching. Will tariffs actually hit? Will markets keep swinging? How will governments, businesses, and people adjust? Thanks for watching Global Perspectives. Don't forget to hit like, subscribe, and tap the notification bell for more world news and analysis. Let's hear from you in the comments. How are these trade tensions affecting your life? Are you worried about the future of US-China relations? Let's keep this conversation going.